India's #1 news network, and you're watching News 9. English news as it should be.
A very good morning. You're watching News 9. I'm Karthik Malhotra. The big story we're tracking for you this morning: tighter takedown rules on social media platforms for explicit content made using artificial intelligence. Will it work, and is it enough? Nikhil Pahwa will tell us more. Also on the show, does the US trade deal offer Bangladesh a competitive advantage over India when it comes to textile trade? That's an exclusive special story on the show this morning. And of course, Gaurang Shah will be joining us later on the show to tell us what next for Sensex and Nifty 50. How far are we from lifetime highs yet again? You're watching Morning Brief at 9. This is Morning Brief at 9. First up, the headlines you're tracking for you this Wednesday morning. India cracks down on deepfakes with faster takedowns and mandatory labeling of AI content. Mandates 3-hour takedown and labels for AI-generated content with stricter platform accountability. India will continue importing cheapest, best quality crude from non-sanctioned sources as trade talks with US, EU intensify, government tells parliamentary panel. Meanwhile, Russia accuses US of using sanctions and tariffs to stop India and others from buying Russian oil, alleges push for global economic dominance. Silver prices fall sharply in the national capital, sliding near 3% to 2,64,500 rupees per kg, while gold of 99.9% purity rises 2,200 rupees to 1,60,700 rupees per 10 grams. US Commerce Secretary Howard Lutnick denies close ties with Jeffrey Epstein, faces bipartisan resignation calls as new files surface. White House says Trump backs Lutnick. US signs strategic partnership with Azerbaijan and seals civil nuclear deal with Armenia, expanding economic and security footprint in South Caucasus. UK Prime Minister Keir Starmer vows not to quit amid Labour pressure as Mandelson-Epstein revelations intensify challenge to his leadership. In global corporate news, Paramount sweetens $108.4 billion hostile bid for Warner Brothers Discovery with 25 cents quarterly ticking fee and $2.8 billion breakup cover as Netflix counters with an $82.7 billion offer. Novo Nordisk sues Hims and Hers in first US patent infringement case over compounded Wegovy as weight loss drug battle intensifies. The government on Tuesday tightened India's IT rules to crack down on the misuse of artificial intelligence on social media platforms such as YouTube and X, mandating takedown of unlawful content within 3 hours and compulsory labeling of all AI-generated or synthetic content. The amended rules, notified by the Ministry of Electronics and Information Technology, respond to a surge in AI-driven deepfakes, non-consensual intimate imagery, and deceptive videos impersonating individuals or fabricating real-world events. The changes come into force on February 20th. Now, under the new framework, platforms must remove illegal content flagged by the government or courts within 3 hours, down from the earlier 36-hour deadline. For content involving nudity or sexually explicit content, the takedown timeline has been cut to just 2 hours. User grievance redressal timelines have also been shortened. Intermediaries or platforms like Facebook, Instagram, X or YouTube are also required to deploy automated tools to prevent the circulation of illegal, deceptive or sexually exploitative AI content. This includes child abuse, material impersonation, false documents and non-consensual imagery. Moreover, these platforms must require users to declare whether content is AI generated and verify such declarations before publishing. The rules place accountability not only on platforms but also on AI tool providers such as ChatGPT, Grok and Gemini. Serious AI-related violations, including those involving child protection or criminal offences, must be reported to authorities. The amendments follow heightened security of generative AI after controversies around Elon Musk's own Grok, which was accused of enabling the creation of obscene and non-consensual images. Remember, earlier this year, Meta directed X to remove unlawful content generated by the chatbot or face legal action. Now, failure to comply with the new due diligence requirements could result in platforms losing safe harbor protection under the Indian law. Joining us with more on the story is Nikhil Pava, founder Media Nama. Nikhil, good morning. Thank you so much for your time. A decisive step toward regulating explicit content online. Question number one, will it work?
I don't think it will work, Karthik. I'll be very honest. I think the ability to detect AI-generated content that is not disclosed is not there. It's not going to be 100% accurate. And the rules expect 100% accuracy here in terms of detection and removal. Like, what is the word reasonably able to detect? What does that mean? But just to dial this back, we've got here faster than we expected because AI proliferation in the country has happened faster than we expected, right? Because of ChatGPT Go being free for a whole year, Gemini being free for a whole year, with Jio, Airtel's partnership with Perplexity. So the diffusion of AI in the country has taken faster than most other countries because it's just there and it's free, right? So I think we've also seen this massive rise of non-consensual sexual imagery apps, including, just two photos into it and it will show them people kissing. Now, it might not matter in some parts of the country, but in some parts of the country, that is reputational damaging for someone, and it can be really, really harsh. So I understand the pressure that the government was under to come out with these rules, but these rules do not work because, they may have removed the earlier version said 10% of the image must have a display of saying that this is synthetically generated or it's AI generated.
Right.
That's perceivable. Now they've removed the 10% requirement because that was stupid to begin with, but they've said that there must be visibility. But think about what this does for, let's say, an AI generated advertisement for a product, right? It has realistically looking people. Cadbury's ran this fantastic ad with Shah Rukh Khan where there was a voiceover of saying, your store in your town, etc., go to them and buy this product from there, and retailers could customize it for them, for themselves, right?
Right.
That now requires, an audio and a video AI-generated disclaimer, which just breaks the ad. The Prime Minister spoken publicly in multiple languages with translation taking place in multiple languages, like wishing people happy Diwali. I remember one instance, right? So.
Right.
The Prime Minister's speech also have to carry a disclaimer because that is a synthetically generated audio. So I think they haven't really thought this through. They're trying to act first and think later.
Act first and think later. But 20th February is the deadline. Does it give platforms enough time to comply?
I don't think so. I think the tools to detect AI are just not there right now.
Okay.
And you can't speed this up. Someone will have to go to court to stop this because every platform that generates AI content will probably, or rather publish that every social media platform will be in violation.
Okay.
Feb 20th is just not workable. I don't know what made you think. I think the 3-hour deadline is also not workable.
Right.
You can't expect, because if hundreds of thousands of AI-generated content-related complaints start coming in, because it's going to be that easy to create, how will platforms take this down at that pace?
Okay.
How do you know whether a complaint is legitimate or not?
Right, of course.
So,
and that too then have a 3-hour window, and of course platforms must take it down in 3 hours. What if the image, or what if there was consensus, and what if it wasn't an AI generated image but a user just happened to flag it?
Well, no, this is specifically for government orders. But then government orders government will also be inundated with complaints, and they might need to act quickly. And in those instances, government won't be able to apply their mind because complaints can come thick and fast.
Right.
So you're just basically going to start censoring first, deciding later almost. Someone will have to, try and get that content put back up. But Spotify, for example, is full of songs with auto-tune. It's full of AI-generated songs now. This kind of disclaimers just don't work. And I've been asking myself this question, do we care if something is AI generated or not, if it is not harming anyone, right? But in this case, this doesn't differentiate between harmful and not harmful.
Right.
So if something's just created for entertainment, marking it as AI generated, or if it's not marked for platforms to take it down. This also, by the way, applies to content globally, not just to India.
Right.
So I don't think anyone in the US who's going to be creating content is going to mark it as AI generated before putting it on Twitter or X or on Instagram. Then what do you do?
All right. Also talk to us about the technical detail in that order, which says that platforms may use the safe harbor advantage. What is the safe harbor advantage which platforms enjoy right now, which they tend to lose if they fail to comply?
Look, the safe harbor advantage is that if I'm a user and I'm using the internet, the platform that I'm using is not responsible for what I do with it. It's like a shopkeeper who sells knives is not responsible for whether you use it to cut vegetables or kill someone, right? It's as simple as that.
Okay.
You can't hold the shopkeeper accountable in the same way you can't hold a platform accountable for what people use it for. Now, the government is saying that if the platforms do not comply with these takedown requirements, they lose that safe harbor advantage. There's nothing that the government is doing for the platforms. This is just saying, if you don't do this, you will be liable for this content.
Right.
And so this is a threat, and it's a sword hanging on top of the platform's heads, saying that they could be held liable for that piece of content that goes up if they don't act, which means you have to act.
Right.
You can't apply your own mind. You can't use your own decision-making, whether this is legitimate or not. You just have to act. So this is basically a government diktat has to be followed, even if the diktat might be illegal. In the past, there are people who've gone to court challenging the government diktat. There is no scope for it anymore. So this basically, to my mind, needs to go to court. Because it doesn't work.
It might just end up in court. But talk to me also about government priorities. And do you think this was the top priority for the government at a time when the world is actually talking about banning social media for underage children, like Australia, Spain, potentially even France? Do you think this could eventually lead to that social media ban for underage, or should that have been made priority and perhaps, a takedown order like this could have been delayed for later?
See, the underage access for underage children to social media is a different issue to tackle, simply because that issue is coming out of dopamine addiction and risk of grooming of children.
Right.
Right now, a child who's 13 years old starts gaining agency over a period of time from 13 to 18. They learn to take more decisions for themselves. They learn not to rely on their parents for many of the decisions. Parents also give them more agency. It's how people grow up.
Right.
Discovering things, acting on social media is a part of that. The problem with social media is that it is creating dopamine addiction. It's basically making children more fragile mentally, in that sense. That's why mental health is such a crisis. It is constantly shoving small pieces of short-form content at them, which basically then means that they don't have long-term attention spans, which hampers their careers. They expect instant gratification. So these are problems which are separate from the deepfake issue. And these are problems that are coming out of how the algorithms function. So instead of regulating the algorithms, we are harming the children, saying, you don't come onto the platform.
Right.
I think that's the wrong approach. The algorithms need to be regulated, not the children here.
All right, the regulation on algorithms and not children. But of course, let's see, if this 20th February deadline holds and if this 3-hour window can be complied with. And like Nikhil, you were saying, perhaps there could be some litigation also going forward on this. We will keep tracking that story. But thank you so much for your time this morning. And moving on now, the government told a parliamentary panel that India will continue to import crude oil from countries offering the cheapest prices and best quality, with oil companies factoring in geopolitical conditions and sourcing only from non-sanctioned supplies. Now, the assurance was given by senior officials from the External Affairs and Commerce Ministries to the Parliamentary Standing Committee on External Affairs, chaired by Shashi Tharoor. Now, among those briefing MPs was Foreign Secretary Vikram Misri. Discussions largely focused on the India-US Interim Trade Agreement and the India-EU Free Trade Agreement, covering issues such as Russian oil, agriculture and tariffs. Tharoor said officials indicated that an interim trade deal with the US could be finalized by the middle of next month, though finer details would follow later. He noted that while Indian products will face an 18% US tariff, this is lower than the earlier rate of 50%. Officials also said India's plan to increase imports from the US to $500 billion over 5 years is aspirational, not binding. This was also reflected in the updated fact sheet posted by the White House, where the word commits has been changed to intends, stating that India intends to buy $500 billion worth of American goods over the next 5 years. Meanwhile, Indian oil companies can now source crude from the US and Venezuela following the lifting of energy sanctions. Russia has meanwhile said and accused, in fact, the US of trying to block India and other countries from buying Russian oil, alleging Washington is using coercive measures such as tariffs, sanctions and direct prohibitions to assert global economic dominance. Russian Foreign Minister Sergei Lavrov said the US is attempting to control Russia's trade and energy ties with major partners, including India and other BRICS nations, through what he called unfair methods and expanded sanctions on Russian oil companies. Lavrov's remarks come amid heightened scrutiny of India's oil imports following US President Donald Trump's claim that New Delhi agreed to stop buying Russian crude under the recent trade deal. Now, while the US rolled back an additional 25% tariff imposed earlier over India's Russian oil purchases, it warned the levy could be reimposed if such imports resume. Listen in to what Lavrov said.
They're banning the operations of Russian oil companies like Lukoil and Rosneft, and they're trying to control our trade, our investment cooperation, and our military technical ties with our largest strategic partners, like India, for example, and other BRICS members.
And just days after finalizing the US-India trade framework, Washington has struck a reciprocal trade deal with Bangladesh, cutting tariffs on Bangladeshi exports to 19%, but granting zero-duty access for select Bangladesh-made textile and apparel products with US-sourced input. Now, this move not only risks Bangladesh's import of Indian cotton yarn, but also offers it an edge over India's textile industry if it buys American cotton and exports to US tax-free. Now, Indian textile stocks that rallied, hitting upper circuits last week, tumbled by about 5% yesterday on the US-Bangladesh trade deal news. This next report explains the textile conundrum.
Just days after Washington and New Delhi struck a historic trade framework, the United States sealed a reciprocal trade agreement with Bangladesh, reducing its tariff on Bangladeshi exports to 19% and zero tariffs on certain textile and apparel goods made with US cotton or man-made fiber. Muhammad Yunus, chief advisor heading Bangladesh's interim government, called the pact a historically new level in bilateral economic ties, saying the US had committed to establishing a mechanism for certain textile and apparel goods from Bangladesh using US-produced inputs to receive zero reciprocal tariff in the US market. US Trade Representative Jamieson Greer described the deal as a meaningful step forward in opening markets, addressing trade barriers and creating new opportunities for American exporters. For India's textile industry, the Bangladesh deal raises distinct competitive anxieties. Under the US-India framework, Indian garments and textiles still face an 18% tariff on exports to the US, even after recent tariff rollbacks. The difference in 1% is in India's favor, but there is more to the fine print. That's by way of Bangladesh that now has tariff-free access for qualifying textiles and apparel, a move critics in India say could divert US sourcing orders toward Dhaka instead of New Delhi. This is especially significant because Bangladesh's garment sector accounts for almost 80% of its export earnings and employs millions, making US market access existential to its economy. Greer's comments also underscore the US strategy: boost American exports and reduce barriers abroad, positioning these agreements as part of a broader push to open markets for US goods and services while tightening economic ties in South Asia. For India's textile exporters, the US-India trade framework still cuts punitive tariffs and opens more predictable market access after last year's steep levies. It also embeds principles on digital trade and industrial goods that could benefit Indian exporters long term. But Bangladesh now enjoys preferential textile access that India does not, at least in the near term, potentially shifting buyer preference in the massive US apparel market toward Dhaka. The economic tug-of-war plays out against complex political relations between India and Bangladesh, especially in the context of Hindu minority executions in Bangladesh since the fleeing of Sheikh Hasina and the Yunus-led interim government in charge. Historically, India and Bangladesh have shared deep cultural and economic ties, but also competitive pressures, especially in textiles and labor-intensive manufacturing. Bangladesh's accelerated push to lock in this deal comes amid a high-stakes election in Dhaka, intensifying questions over timing and long-term implications. In simple terms, India now has tariff relief broadly across goods under its US deal, but in a key export category like garments, Bangladesh may wield a temporary edge because of zero duty access tied to US inputs. For New Delhi, the challenge will be whether India's broader tariff and market opening gains can outweigh a textile access disadvantage that might reshape sourcing decisions in global value chains and put pressure on India's cotton and yarn exporters too.
All right, so how are textile stocks likely to perform in trade today? We will find out after the break, because joining us after the break is Gaurang Shah, where we'll understand this gap-up opening that we're seeing in the Indian market this morning. Is it likely to sustain its momentum? That and more on this edition of Morning Brief at 9. Keep watching.
साल से आपने आईसीआईसीआई लोम्बार्ड पे भरोसा रखा और आपके सपनों को सुरक्षित रखने का मौका दिया। शुक्रिया इंडिया। आईसीआईसीआई लोम्बार्ड, निभाए वादे।
Welcome back. You're watching Morning Brief at 9. Let's quickly pivot to the stock market action. And it seems to be a gap-up opening for both the Sensex and the Nifty 50. In fact, Nifty 50 now nearing that 26,000 level. As things stand right now, 25,994, just 6 points short of that 26,000 level. Meanwhile, Sensex is holding steady at about 84,400 odd levels. Some negativity coming from the Nifty small cap 100 space, likely by the sell-off that we saw, which began in textile stocks yesterday. Is that something which is likely to continue dampening the mood on the market this morning? We will get Gaurang Shah to tell us. But first up, let's look at the Nifty 50 heat map and see what is the visible stress signal or the positive momentum in the large cap Indian space. And it seems that the consumer durable space is completely in the green this morning. In fact, Titan is up about 1.5% after the robust Q3 net profit growth that it posted yesterday. Similar news actually even coming in from Mahindra & Mahindra. That stock is up more than 1%. Eicher Motors again post the announcement of Q3 results, up more than 6% in trade this morning. That stock is up 6.16%. in the first 5 minutes or so of trade. Meanwhile, mixed cues coming in from the energy space. Reliance Industries is up 1/3 of a percentage point, but we are seeing some sell-off in ONGC as well as Coal India. That's the broad Nifty 50 space. But let's now introduce Gaurang Shah, who joins us this morning. Gaurang, thank you so much for your time and for joining us here on News 9. First up, just help us understand the kind of sell-off that we saw in the textile stocks yesterday, that fear that Bangladesh is likely to get a sweeter export market in the US as compared to India, sort of ruining and raining down on hopes of Indian textile manufacturers, which were riding high on hope last week?
Thank you so much for having me on the show. Good morning to all your viewers and to you as well. So I think, even earlier we spoke about this India-US trade deal and US's trade deal or FTA related, deals with the rest of the world, especially with our neighbors. And I had mentioned that, it is always better to know the details and then take a decisive call in terms of your investment philosophy and theory. There was uncertainty. There still is uncertainty unless and until the deal is signed, sealed and delivered. I think it is not done unless it is done. And with this Bangladesh details emerging, I think the fine edge that we had about a day or two back in terms of Indian textile sector now seems to have gone away, drifted away rather, with the kind of advantage that Bangladesh textile sector will have with respect to the trade deal that has been done with US. Having said that, I think this is still work in progress, Karthik, to be very honest. And short to medium term, depending upon the news flow, whether how credible they are or how true it is in black and white remains to be seen. But this choppiness and volatility will remain unless and until we have a lot of clarity. And like I mentioned, unless it is signed, sealed and delivered. So we don't cover many stocks in the textile universe. There's just one stock. And before I give that name, Karthik, prudent to allow me to give a disclosure that all recommendations that I'll be sharing this morning on your show, Karthik, are a part of our fundamental research team recommendation from a long-term point of view.
Right.
Our company, Geojit or I, we do not have any kind of personal interest, no financial interest, no conflict of interest, but we give advice to our clients on similar lines. They might have their investment interest. So Wellspun Living is one textile-related company that we are positive on, purely from a domestic point of view.
Right.
And like I mentioned, sectors not only textile, I think as we go further to that day in the March when the deal will be signed, sealed and delivered, we will witness a little bit of choppiness and volatility.
All right, choppiness and volatility likely to stay. But any sort of identifiable pattern right now, given that Nifty 50 is near that 26,000 level? In fact, just about 15 points or so short of that 26,000 level. What are the next sort of resistance levels that you're anticipating for Nifty 50 until, of course, March arrives and we understand the final details of the trade deal?
So Karthik, on this week, Monday, our company Geojit has a YouTube channel called Geojit Spotlight, and over there, in our weekly market outlook, I had mentioned that if we are able to cross over 25,800 decisively, then the move towards 26,000 will definitely be visible, and that level of 26,000 will be seen on the horizon. Now that we are virtually few points away from that 26,000 level, Karthik, I think a decisive crossover and a close about 26,000 on the Nifty spot I'm talking about, Karthik, will take us eventually in the coming days and weeks to the all-time high that we've seen of somewhere close to about 26,370 odd. And I think we will be able to cross over that as well. A couple of points, Karthik. Relentless selling has eased off as far as FIs are concerned. India Volatility Index, VIX, which used to be at 15 plus, is currently at 12.25 or 11.25 or 11.5, which is again a big positive.
Yeah.
And steady earnings, whatever we have seen yesterday and whatever remains to be seen in this week, because after this week, Karthik, will be curtains down for third quarter earnings.
That's right.
And to sum it up for your viewers, I think the good part about the Q3 earnings was that there were no dark spots or no red flags. So that was a big positive. And I think even if India Incorporate or India Inc. has delivered these kind of numbers in an environment which was very challenging, then I think as we have a lot of clarity, this performance could increase in the fourth quarter and the next financial year.
All right. So that is as far as the broader sort of outlook on the market goes, but also some news items that, Gaurang, I'll take the liberty to run past you. And the first one, of course, comes from the government's decision to disinvest or partly divest its stake in BHEL. How significant is that? Because we are seeing some negative momentum on the stock that morning.
I think this ball has to gather more momentum, honestly, Karthik.
Okay.
And this is my personal view, and I mentioned this earlier also, that government business is to form policies and govern the country and create conducive environment for domestic corporates to perform well and for foreign direct investment to come in at a much faster rate.
Okay.
This divestment process has been spoken about in detail in every budget, but unfortunately, you've not seen that kind of momentum at ground level. So this is a good initiative. I think the OFS is at a discount of about 8 to 10% compared to where BHEL stock closed yesterday.
Yeah.
As a disclosure, we have a positive coverage on BHEL from a long-term point of view.
Okay.
One overhang on the counter is execution of order book, because that has been at a slow pace.
All right. So, but BHEL stock, despite this sort of, one would say, a glimmer of good hope, is actually trading down almost 6% or so at market open. Do you think this is an opportunity to buy BHEL?
This is reaction to the OFS price, Karthik.
Right.
And it has always happened whenever a company comes out with an offer, and if that offer is at a discounted price than the cash market price, then the stocks reacts accordingly, whether it is BHEL or any other stock. So from a long-term point of view, to answer your question, yes, it is time to invest in BHEL from a long-term point of view.
All right, time to invest in BHEL is the word coming in from Gaurang Shah. I also want to talk to you about Titan. What a stellar set of numbers, and who would have expected that an eyewear maker and a watch maker reporting almost a 50% jump in net profit. Of course, you know, we've had the biggest bulls ever walked on the Lal Street, always being bullish on Titan. But what is your view on Titan at this moment? A 50% jump in Q3 net profit to almost 1,500 crore rupees.
So I think this is what I was speaking about, Karthik, that despite of a challenging environment, Indian corporates have delivered a decent set of numbers. Titan has delivered a super set of numbers.
Right.
It was beyond everybody's imagination or numbers that they had penciled down. Again, a disclosure, we've been maintaining a positive stance on Titan from a pretty long period of time. And this is one company, for the clarification and understanding of all your viewers, is not only in gems and jewelry. It has got wristwatches, gems and jewelry. It took over a company called Carrot Lane, which is a premium platinum jewelry manufacturing company. Sometime back, it took over a company in Dubai called Didamas, if I'm not mistaken. They are into eye care, they are into accessories, they are into backpacks, they're into personal products, etc., etc. So contribution comes in from across verticals. And we maintain a positive stance on Titan from a long-term point of view.
All right, positive stance on Titan. I want to also run past you the next news item, and this is Tata Motors commercial vehicles demerged from the overall Tata Motors stack last year, and now it has received the biggest ever 70,000 units order from Indonesia. Now, ever since this demerger, in fact, if you remember, Gaurang, last year, Tata Motors was one of the laggards, and that stock at a certain point was down almost 50% from its 52-week cycle. And now after the demerger, we have been seeing some positive momentum on the passenger vehicle side, but this sort of robust order book for commercial vehicles likely to bode well for the company going forward?
So this is a classic case, allow me if I can make that statement, Karthik, from rags to riches. I believe it was trading at underperformance that you mentioned, Karthik. 150, 200 from those levels. It was an outperforming stock in the auto pack, which went beyond 1100, correct me if I'm wrong. And then because of certain constraints, issues, global slowdown, JLR not doing well in the global arena, the underperformance. And now with the company hived off into two separate entities, Tata Motor Commercial Vehicle and Tata Motor Passenger Vehicle. As a disclosure, when the combined entity stood, we had a positive coverage. Post that, after the company split into two, the coverage is under review, Karthik. So I won't go as specific into buy, sell and hold either for Tata Motors PV or CV, because it is under review. But the opportunity is huge for this particular company. So, you know, and this trade deals that are signed, which
All right, we seem to have lost Gaurang Shah. We'll try to get him back. Meanwhile, another corporate news was from Britannia, and Britannia saw a 17% rise in Q3 net profit at about 682 crore rupees. Gaurang Shah is back with us. Gaurang, why don't you complete your point on Tata Motors commercial vehicle before we move to Britannia?
Apologies for this wonky internet corrections, Karthik. Both the companies are under review, Karthik, but the opportunity is huge. Trade deals signed with various countries will give opportunity for companies like Tata Motors for their high premium end segment, JLR, exports related, pricing related, duty related, and commercial vehicle segment for not only Tata Motors but for other commercial vehicle manufacturing companies like, for example, Eicher Motor, Ashok Leyland, Mahindra and Mahindra. There is a lot of opportunity because now with the kind of Bharat Mala Pariyojana, the road network, specifically to dedicated freight corridors, is opening up huge opportunities for logistic companies to get in more number of commercial vehicles.
And finally, last talk in news this morning, Britannia, 17% rise in Q3 net profit, 682 crore rupees in net profit for the December quarter. Again, FMCG, the defensive stocks as we call them, not really directly linked to changes in RBI's monetary policy stance and overall the consumption boom that we are seeing with the reduction in GST. Your long-term view on Britannia, Gaurang?
Always positive, Karthik. India is, and India will remain a consumption-driven economy. 140 crore population, large 35% of it is young, Gen Z. Age is somewhere close to about 28 to 30 years or maybe below that. Consumption is a big theme that is driven by this kind of population that we have, young and energetic. Cost of production has come down because the input cost has gone down, profit margins have improved. Whatever happened on 22nd of September 2025 in terms of new avatar of GST 2.0. Before that, good monsoon, so semi-urban rural India push in terms of consumption going up. And before that, in the last budget, Honorable Finance Minister gave a huge change in terms of no tax for 12.75 lakhs.
Yeah.
All those people. So I think all this will translate into positivities in the fourth quarter and then the coming financial year. Britannia, Tata Consumer, Godrej Consumer, ITC, HUL, Nestle, Dabur. These are some of the names on which our fundamental team has a positive coverage.
All right, a positive coverage on pretty much every FMCG stock out there. Gaurang Shah, thank you so much for your input and for joining us. Pleasure having you with us always. And moving on now, silver prices fell sharply in the national capital on Tuesday, sliding as much as 7,500 rupees or nearly 3% to 2,64,500 rupees per kg from the 2,72,000 levels the previous day. In contrast, gold of 99.9% purity rose 2,200 rupees or 1.4% to close at 1,60,700 rupees per 10 grams. The traders said gold advanced for the second straight session on sustained buying by jewelry as well as by investors. Now, in global markets, spot silver slipped 1.37% to $82 an ounce, while gold hovered slightly lower at $5,052 per ounce. The Minister of State for Finance, Pankaj Chaudhary, informed the Parliament on Tuesday that as of the 28th of Jan this year, close to 72,450 crore rupees of unclaimed deposits of banks are lying with the Depositor Education and Awareness Fund maintained by the Reserve Bank of India. Now, this money reflects balances that have remained untouched for a decade or even longer. Now, as a practice, deposits in savings or current accounts that remain inoperative for 10 years or term deposits not claimed within 10 years from maturity are classified as unclaimed and shifted to the DEA fund managed by the RBI. Now, data shared with the Parliament showed that public sector banks account for the largest share of such deposits. As of the 28th of Jan this year, unclaimed deposits with state-owned banks stood at 60,571 crore rupees. Private sector banks held 9,607 crore rupees. Foreign banks accounted for about 2,275 crore rupees. In order to reduce the stock of unclaimed deposits and prevent fresh accumulation, the government and the RBI have rolled out several measures. These include the launch of a centralized online platform, which stands for Unclaimed Deposits Gateway to Access Information, which allows the public to search for unclaimed deposits across multiple banks at one place. The minister also said the Banking Laws Amendment Act of 2025 has introduced provisions allowing customers to make multiple nominations, up to 4, either successive or simultaneous, to improve the chances. And shifting focus now to global stories you're tracking for you. Let's begin first with the U.S. stock markets. Wall Street ended mixed on Tuesday, with the S&P 500 and the Nasdaq closing lower, while the Dow Jones Industrial Average edged up to its third straight record close. Now, the S&P 500 was dragged down by shares of Alphabet, which slipped after the company announced a $20 billion bond sale.
U.S. stocks ended mostly lower on Tuesday, with the Dow bucking the trend to notch its third record close in a row, while the S&P 500 shed 0.33% and the Nasdaq lost about 0.6%. The S&P 500 was weighed down by shares of Alphabet, which fell after Google's parent said it sold bonds worth $20 billion. The announcement played into investor worries over the hundreds of billions of dollars tech companies are spending this year as they race for AI dominance. Joe Hegener, founder and chief investment officer with Asterazoa Capital Management, shares those concerns.
I don't think that the CapEx spend is very sustainable. And so then the question is, what does GDP print look like sans CapEx spend? And, at what point does margin come into play for these AI businesses and these data center buildouts? Are the profitability metrics going to be, I have no doubt that at some point the adoption is going to be there. And this is a great ubiquitous technology. But I think there are some major implications for the broader economy as it relates to the sheer volume of dollars being thrown at this phenomena. And how long does that last for?
In the software space, however, shares of Datadog bounded higher Tuesday and led S&P 500 percentage gainers for the day after the cloud-based monitoring and analytics platform beat quarterly estimates. Among other movers, shares of Marriott hit a record high, jumping 8.5% for their biggest daily gain since April, after the hotel chain projected a 35% rise in fees from co-branded credit cards as affluent travelers splurge on luxury vacations. And shares of Spotify soared nearly 15% after the audio streaming platform forecast first quarter earnings above expectations, benefiting from strong user growth and price hikes. Meanwhile, data from the Commerce Department showed U.S. retail sales unexpectedly stalled in December as households scaled back spending on vehicles and other big-ticket items. Investors now await the delayed release of January's non-farm payrolls due on Wednesday.
All right, and now let's delve deeper into that Alphabet bond sale. The parent of Google is planning a rare 100-year bond as part of a $20 billion multi-currency debt offering to fund massive investments in artificial intelligence as well as data center expansion. Now, valued at nearly $3 trillion, Alphabet's move highlights how big tech is increasingly tapping long-term debt, as long as 100 years in this case, to finance the AI infrastructure boom. Here's more.
Alphabet Inc., Google's parent company, is planning a highly unusual 100-year bond sale, the first by a tech company in nearly 3 decades, as part of a broad multi-currency debt offering to fund massive spending on artificial intelligence and data center expansion. Alphabet is currently valued at just shy of $3 trillion. Its total expected spends on AI infrastructure are stated to the tune of over $175 billion, a sum equity investors scorn. Alphabet is selling a total of around $20 billion in bonds, a blockbuster offering that includes shorter maturities and this ultra-long note. The proceeds are part of what analysts expect will be a record year for corporate debt issuance in the tech sector, driven by huge capital needs to build out AI infrastructure. Corporate bonds are loans that investors make to a company. The company borrows money and agrees to pay regular interest, called a coupon, until a specific date, in this case a century, when the principal must be repaid. Most corporate bonds come due in few years, 5, 10 or maybe 30. But a 100-year bond stretches the timeline to a full century. That means Alphabet is asking investors to lend money today with the promise of repayment as far ahead as the year 2126, an extraordinary time frame in the world of corporate finance, especially for technology firms. Issuing debt isn't new for big companies. But century bonds are extremely rare outside government or long-established institutions like universities and utilities. The last time a major tech firm did this was IBM in the late 1990s. In simple terms, bonds let companies tap long-term capital from investors like pension funds and insurance companies who want a predictable income and hold obligation stretching decades. For Alphabet, extending debt this far can lock in financing at today's interest rates for projects that take years to pay off. But with bonds that stretch a century, a question naturally arises. Is it fair to expect a company like Alphabet to still exist 100 years from now? Alphabet today is one of the world's largest technology companies, generating hundreds of billions in revenue and free cash flow, with dominant shares in search, advertising, and expanding businesses in AI and cloud services. That diversity and scale give investors confidence in its long-term creditworthiness. Yet history shows that even giants can stumble. Some investors point to past tech leaders that seemed unassailable, only to fade over time with markets and technology shifting. Ultra-long bonds don't guarantee the issuer's survival. They simply reflect investor belief that the company's credit will remain strong enough to meet obligations long into the future. Century bonds are not bets on perpetual existence themselves. They are instruments priced by investors who weigh future risks, interest rate changes, and the issuer's financial strength. Alphabet issuing such debt signals both corporate confidence and investor willingness to back that confidence. In practical terms, the 100-year bond underscores how deep Alphabet's AI investment push has become and how capital markets are adapting to fund long-term technology build-outs. Whether Alphabet is around in 2126 isn't a requirement for the debt to make financial sense. But the market clearly believes today that its business and earning power are robust enough to justify ultra-long fundings.
All right, staying with corporate America, Paramount Skydowns has sweetened its bid for Warner Discovery Brothers, offering additional cash incentives if the deal fails to close on time and agreeing to cover the breakup fee the HBO owner would owe Netflix if it walks away. Now, under the revised proposal announced on Tuesday, Paramount will pay 25 cents per share for each quarter the deal remains pending, starting in Jan 2027, aiming to ease investor concerns and accelerating the transaction.
Paramount Skydance sweetened its hostile takeover bid for Warner Brothers Discovery as it continues to battle Netflix for possession of the famed Hollywood studio. Paramount on Tuesday offered 25 cents per share for each quarter the deal fails to close, starting in January of 2027. That so-called ticking fee would amount to roughly $650 million in cash per quarter until the deal's completion. Paramount also said it would cover the $2.8 billion breakup fee that Warner Brothers would owe Netflix if their deal fell apart. Paramount did not raise its overall offer of $30 per share, or $108.4 billion including debt, for the whole of Warner Brothers, home to major franchises Game of Thrones, Harry Potter, and DC Comics superheroes Batman and Superman. Netflix has offered $82.7 billion in cash for Warner Brothers studio and streaming assets. Several analysts said Paramount's move signaled confidence that the Netflix deal may fail to pass regulatory scrutiny and that Paramount would have an easier path to approval. Paramount CEO David Ellison is the son of billionaire Oracle co-founder Larry Ellison, who has cultivated a close relationship with President Donald Trump. Last week, Trump said he will stay out of the battle for Warner Brothers, a reversal from late last year when he said he would be involved in reviewing the deal. One analyst told Reuters that Paramount's sweetened offer is unlikely to sway Warner Brothers, adding, quote, Paramount is throwing spaghetti at the wall and hoping something sticks. Warner Brothers and Netflix did not immediately respond to requests for comment. Shares of all three companies were higher in Tuesday morning trading.
Danish drug maker Novo Nordisk has filed a patent lawsuit against Hims & Hers, opening a new front in its fight against companies selling compounded versions of its blockbuster weight loss drug Wegovy. The case marks Novo's first U.S. patent infringement lawsuit targeting a compounder over Wegovy as the company moves to protect its intellectual property and market share in the booming obesity drug market.
Novo Nordisk filed a patent lawsuit against Hims & Hers on Monday. It marks a new front in the Danish drug maker's campaign against companies selling compounded versions of its blockbuster weight loss drug Wegovy. The case is Novo's first US patent infringement lawsuit against a compounder over Wegovy and comes as large telehealth companies have expanded rapidly into the weight loss drug market, particularly after the US Food and Drug Administration determined that the drug's active ingredient, semaglutide, is no longer in short supply. Novo's lawsuit follows Hims' launch on Thursday of a $49 compounded version of Wegovy, and then a quick retreat after the FDA announced it would take action against the company last week. In a statement, Hims said that the lawsuit, quote, assaults a well-established vital component of US pharmacy practice, adding that it has, quote, improved patient care for everything from obesity to infertility to cancer. Novo's complaint did not specify how much the company was seeking in damages, but its general counsel told Reuters it was a very significant amount.
U.S. Commerce Secretary Howard Lutnick sought to distance himself from Jeffrey Epstein on Tuesday, saying he barely had anything to do with the disgraced financier amid bipartisan calls for his resignation over newly disclosed ties. The controversy follows the U.S. Justice Department releasing millions of Epstein-related files last month, including emails suggesting Lutnick visited Epstein's private island years after claiming he had cut off contact. Now, Lutnick rejected the allegations during a Senate hearing, saying the two exchanged only about 10 emails and met 3 times over 14 years. He said the island visit was an incidental lunch while boating nearby, and that his family was present too.
I met Jeffrey Epstein when I moved to a house next door to him in New York, right? And I met him then. Over the next 14 years, I met him 2 other times that I can recall. 2 times. And that is none for 6 years. So 6 years later, I met him. And then a year and a half after that, I met him, and never again. Probably the total, and you've seen all of these documents, of these millions and millions of documents, there may be 10 emails connecting me with him, probably about 10 emails connecting me with him over a 14-year period. I did not have any relationship with him. I barely had anything to do with that person, okay? I did have lunch with him as I was on a boat going across on a family vacation. My wife was with me, as were my 4 children and nannies. I had another couple they were there as well with their children, and we had lunch on the island. That is true, for an hour, and we left with all of my children, with my nannies and my wife, all together.
Meanwhile, the White House said the U.S. President Donald Trump is standing by Howard Lutnick amid renewed scrutiny over his past ties to convicted Jeffrey Epstein. At a press briefing, White House spokesperson Caroline Leavitt said that Secretary Lutnick remains a very important member of President Trump's team.
Secretary Lutnick today was testifying on the Hill, and he said that he had visited Epstein's island in 2012 with his wife and children, and that's after he said that he had cut ties with Epstein. And Justice Department documents show that he was in contact with Epstein through 2018 over messages. So does the White House stand behind Secretary Lutnick right now, or given what he has said today, has there been any shift in how the White House is viewing Secretary Lutnick's performance?
No, Secretary Lutnick remains a very important member of President Trump's team, and the president fully supports the secretary.
And that's all we have for you on the show this morning. Thank you so much for watching Morning Brief at 9. News continues right here on News 9, so stay tuned.
पढ़ता है, खेलता है, झूलता उछलता है, दौड़ता कभी कभी दौड़ कर आता है, आगे आगे बढ़ता है इंडिया, हम